So we think it's going to be unrealistic for investors to expect double-digit returns from markets in a low inflation environment. And to highlight that point, this chart shows returns provided by the Australian share market over different time horizons, over 40 years, 30 years and 20 years. What you can see over the last 40 years is that Australian shares have provided very strong returns of around 12% per annum, whereas over the last 20 years that number has been closer to 8%. You can see the underlying building blocks that have contributed to those returns over various timeframes. The main reason why returns have been so much lower over the last 20 years as compared to the last 40 years is because of inflation. You can see over the last 40 years inflation's averaged 4.7% per annum, whereas over the last 20 years that number has been 2.4%. So it'd be unrealistic and a mistake for investors to extrapolate returns over the long term going forward, particularly when those returns were generated in a very different inflationary environment to the one in which we find ourselves today.